At 20,000, I would say we are talking about the Nifty, which is large cap, of course. I think there are still pockets of attractive valuations. For example, while banking index is almost at its all-time highs, the valuations in terms of price to book, etc., are still not at the pre-COVID levels. So there is some pockets of value in banking. There is some pocket of value even in engineering companies. I would say the large cap engineering companies. So the Nifty, I don't think is overvalued. Little above long-term averages, maybe 5-7% above long-term averages, which is okay if we deliver growth. Then this is justified. So as far as the large caps are concerned, I'm not too worried. I think in small and mid caps, there is a bit of froth happening. The same 200-300 stocks are being chased by PMS, local mutual funds who are getting flows. So that's where I would be a bit more cautious and more selective.
Interesting. So despite that, I mean, I was reading a sell side report which said that the Nifty may be at one standard deviation or slightly even more than that above mean. But a lot of pockets individually are not. They started BFSI, something that you did too, wherein the valuations are not quite there. And therefore, if flows continue both local and global, then you might well see, even if the markets consolidate, a lot of those pockets start rising because that is where the flows will go. You are a large institution yourself, Mihir. When you get the monies now, is that natural way of thinking that let me try and look at now pockets, or let me now try and look at pockets which are not overly valued? How do you think about it?
So valuation is something that works all the time, that we have to take care of all the time. But more important than valuations is our estimates of growth for that particular segment. So if we are saying that the economy will continue to grow, then corporate lending, MSME lending, as well as retail lending will continue to grow. For the last 5 years, we've seen retail lending being the pillar of growth for banks as well as NBFCs, whether it's in terms of mortgages or personal loans or credit cards or durable finance, microfinance. But it's all been led by retail. Now, if the Indian economy has to grow at 7 to 8%, say even if not 6.5 to 7%, it has to come on the back of corporate growth, and that's where we think that the biggest risk is and biggest opportunity is that if corporate lending comes back, that can be the next leg of investments as well as the uptick in the market.